Hi, welcome to this podcast where I'm going to look at calculations which are linked to break-even. Before we get any further, I think what we need to do first of all is to make sure that we know what the formulas are that we're looking at and what they mean. And the first thing we're always going to need to calculate is the contribution. And the contribution you can define as the difference between the selling price and the variable costs. And that difference between the selling price and the variable cost will then either be used to cover the fixed costs of the firm. And once you have sufficient contribution to have covered all the fixed costs of the firm, then it will be used to generate profit. So for example, once we've covered the fixed costs of the firm, if we make £3 or dollars per unit, that would equate to an extra $3 or £3 of profit. And if we were operating below the break-even point, every extra unit made and sold would reduce the loss by $3 or £3 per unit. And be very careful when we're doing this sort of management accounting. Make sure you get your units right. So, for example, it's $3 or £3 per bag, $4 or £4 per bag. Break-even point, for those of you who are in my class, we've already done break-even as a graph, okay, but it's the level of output and sales where the revenue equals the costs. The formula for that is the fixed cost divided by contribution. So important to remember to calculate the contribution first. And the units are units of output. So if I'm a bag factory making bags, then it is 200 bags. And make sure you write bags, because quite often in an exam, they will give you a mark for getting the units right. And there's a rule on this, and the rule is that if we get a decimal, we always round up. And the reason why we always round up is if our calculation says we need to make 199.1 bags to make break even, what that means is, because it's a discrete variable, i.e. we can only either make 199 or 200 bags, and if we only manufacture 199 bags, this firm will still be making a loss. So we always round up. And then we've done this again. Students that I teach have already watched a video where we look at margin of safety. The margin of safety is a measurement of risk, and it's just your planned output minus your break-even output. And again, the unit of output here is bags. So units of output. Very quickly, I'm going to run you through some calculations. We've got a bag firm here. We've got fixed costs of $20,000. Then we've got labour of $2 per unit. Materials are $3 per unit. The selling price is $12 a unit, and the planned output is 4,000 bags. So the first thing we're going to do is calculate the contribution. So we need to know the total of the variable costs, which is 2 plus 3, which equals $5. We then calculate the contribution where we use the selling price of 12 minus the total of the variable costs, and that gives us $7 per bag. The break-even point is the fixed costs divided by the contribution per unit, so 20,000 divided by 7, which equals 2,857.14 bags. So the actual break-even point of this firm is 2,858 bags. And that would be my final answer. And I would always make sure that I put the decimal in initially so the examiner can see what I've done, and then I round it up. Okay, and then for the margin of safety, that would be the planned output of 4,000 bags, take away 2,858. So that equals 1,100 142 bags. Okay, there's a bit more to the video, but for my students, I've done you a question to go through and do those calculations. So if you just pause the video for a moment if I teach you and do those calculations. Okay, the other thing that we do need to do with break-even, it's actually quite simple, is a calculation of output for a required level of profit. So the business has decided that it manufactures bags and it wants to make a certain amount of profit. And in the case of this business, they've decided, or the owners decided, that for them to run the business, they want to make $15,000. Answers for this, again, are always given in terms of units of output, i.e. 15 bags, and again, we would always round up. Okay, so we'll do the calculations. I won't go through again the calculation of the contribution because we still need the contribution per unit to do the calculation. Okay, so the contribution per unit stays at $7 per bag, but the key thing here is we do the planned profit plus the fixed costs divided by the contribution per unit. So fixed costs is 20,000. Required profit is 15,000. On the top, we've got 35,000 as a total. We divide that by the contribution per bag of 7, and that gives us a nice round number of 5,000. So we don't need to worry about rounding up, and the answer therefore is 5,000 bags. Okay, again, for my students, there is a question for you to do there. Right, any questions? If I teach you, please make sure that you email me. Obviously, we'll be going over this in a lesson. Thank you very much for your attention. Okay, and I will see you soon if I teach you. Thank you very much.